Ven, what does this mean? The ride-up in gilt yields, it's not happening today, but we saw a significant ride-up yesterday. And the views are on 5% terminal rate. What does that mean for pound strength coming through in the weeks and months ahead?
Well, the pound has come back more than 20% from its lows last year. And we have known for a long time now that the UK economy is likely to slow this year. So, in other words, the pound is doing something different to what the economy is doing. So there is something driving the pound despite the gloom and doom. And what is that factor? That factor is the dollar weakness, broad dollar weakness, stemming from the fact that the Fed is approaching the end of its tightening cycle. In such a scenario, the euro will be bid and the pound will outperform the euro. And this is the key thing that the markets have been missing. And I've been saying this from the start of the year, the pound is going to rally. And it's doing a 125 thereabouts now. But I do think that it's definitely got more upside in the months to come.
Yeah, you were the contrarian at the beginning of this year, Ven Ram, with that call for stronger pound. 124, as you say, close to 125 on pound dollar. You had the view from Jeremy Stretch earlier, you get to 126. He's not really buying the view that you get 130 on the pound. Where do you think it ultimately tops out? Do you have a view on the next level?
I do think that 130 is definitely doable for sterling, particularly later in the year. I think what the markets are waiting for is confirmation that the Fed is going to stop. And if the Fed starts cutting rates, as the markets are speculating they will by the end of the year, I think that the dollar has big downside. That will push up the euro and that will push up sterling definitely towards 130 levels.